Hello and welcome to this micro training video from FMCG Academy. Simply pause on the screen here if you want to read through this cover slide. Today we're going to talk about how to analyze a category in the short to medium term. So specifically short to medium term, which for me is 6 months to a year's time frame. And we do that with the help of 33 key metrics, which I'm going to introduce you to today. I'm sure you've seen a number of them, but these are 33 key metrics which will help you analyze a category. And for a minute, I'm not saying that you should not analyze the category in the long-term trends, and you should look at those. For example, for the laundry wash category, if you look at a 10-year trend, you will discover new things. You will see how the category is evolving. And I've just broken this down into standard washing powder, premium washing powder, and liquids. It's a very simplistic segmentation. I've never worked on the laundry wash category, and just looking at value sales, dollar million over a national, you could look at it for a retailer or a region, or whatever scope of your sort of role is. But you can see the category sort of declining on washing powder, standard powder a bit. You can see that premium powder really hasn't taken off much, while liquids have gained a fair amount of share but seem to be plateauing now. So yes, this is the long-term sort of trend work which you anyway need to do, and also explore usage and habit studies and all other research in terms of where the category is getting affected by macro trends. But this video specifically is about the short to medium term. So 6 months to a year, and that's what a lot of people do when they're doing their budgets, their analysis, the analysis they do for their budgets, etc., to arrive at an insightful stage where they can write strategy. So the key things we look at here are, I'm going to start with the first cluster, which is value, size, share, and growth of category segments and competitors. And there are 6 metrics there, and we'll talk to you about those. These 6 metrics typically give you the state of the category. And the balanced 27 metrics basically help you understand how the category reached the state it is in. So the other 27 metrics, starting with ranging share of SKUs and distribution. This will, by ranging and share of SKUs, you're seeing that if your products are not on shelf, the impact is instantaneous in terms of performance, and it also has an impact on the category. So there are 6 metrics there. And then we look at pricing, which is becoming more and more important. Again, 6 metrics there too. And promotional activity, which for a lot of mature and well-developed categories is becoming more and more critical. You're getting categories now with 60 to 70% of their units sold on promotion now. In fact, I've been helping a client recently do work their promotional strategies on a 80% units on promotion sort of category, and that's been challenging with in terms of what metrics you need to look at. But without diverting too much, the next few metrics are the 5 metrics on media investment, and you need to look at those just to see and it gives you a strategic idea of your competitors, who's investing, who's not, how are they investing, how much are they investing. Helps you form an idea of what the landscape is and what the other players are up to. The way we're going to run through this is using a simple grid. So we're going to use data for 1 year, not 6 months. You can do this for 6 months. You can do this for a quarter. But we use the latest MAT, and MAT here stands for Moving Annual Total. It's a pretty common term you'll hear in the industry. What I've done is I've broken laundry wash into the various segments. So you're seeing in the gray background the category of laundry wash. The segments are in gray, and then the grids go below that. The various players are below the segment. So we first look at total category at a manufacturer level, and in the orange sort of background here and my brand, you'll find your organization or my brand or the company you work for, the organization you work for. And so just keep an eye on your own performance a bit more closely, as we all prefer to do. But again, we need to look at others too. So, and then standard powder and the brands below it and the others. So the first key metric in the value, size, share, and growth of category and competitors. The first one we're going to look at is value sales. So this is a very common metric. So it just gives you, for most part, you won't get it's not a very insightful metric, but it gives you an idea of size and scale, which is what it does. So it's telling you this is a $300 million category, and our business is about $50 million there. And there's one manufacturer nearly one third of the category at $99 million, which becomes more evident when you start looking at value percentage share of category. So value percentage share of category is basically all the numbers below the 300 being divided by 300. So you get 16.6% market share for my organization or my manufacturer. My brand is 10.5%. What you also learn out here is that standard powder is about 77% of the category. Premium powder is just 3.5%. And liquids are about a fifth of the category at 19.1%. And your brand has a fair amount of activation in all the three segments. The next metric starts giving you now a bit more. It starts telling you who's moving, who's not. So you do learn that my organization has basically gained 3.3 share points. This is not a growth number. This is a share change number. So the previous year's share from 16.6 would have been 13.3%. So 13.3, and you've gained 3.3 share points to reach 16.6. And same for all the others. The calculation is exactly the same. So you can see that manufacturer X has gained 1.3 share points. Manufacturer Y is in real trouble, losing 4.4 share points. And likewise, and you can see that standard powder has declined in performance in share as well as premium powder, while total liquids are actually growing. Now the same share calculation I also like to look at from a segment point of view, and basically what we do is we can understand what is the performance within the segment. So for example, all the categories and segments will be 100%, so because we're looking at shares within the segment. For the top part of my manufacturer shares are exactly the same. There's no difference between these numbers and these numbers here. But at a segment level, you can see that my brand was 10% of the category in standard powder, is 14% of standard powder now. So you get an idea that brand A is 1/4 of the category, 1/4 of that segment. And you can see in liquids, for example, brand is 26% of the segment and declining, and segment shares going down by 0.5, but category share through that segment is actually going up. So it tells you the segment may be growing at a faster rate than us, which is what we come to next, looking at value percentage change versus a year ago. And this is a very common metric. People look at value sales and value change and value share normally. I've just added a few more metrics in terms of looking at variances and segment share. So here we can see that my manufacturer, so the category is actually flat. So that's one, it's about maybe a marginal decline. But the good thing is my organization, my manufacturer is growing at 25%. That's a big growth. Manufacturer X, which is who is the biggest player in the category at 33%, is also growing at 4%. Which is also good growth for a big player. Manufacturer Y is in serious trouble, declining at 14%. Standard powders are flat. Premium powders are exiting. So 18% decline, small segment, 3.5% of the category, and declining. And we are part of that big decline. Everyone in that is actually declining. All the key players are definitely declining. So this is a segment to watch out for. Either it needs rejuvenation or it is probably going to die very quickly. Total liquids growing at 6%. So this segment is growing. So my brand is growing at 4% there. But you can see it's losing segment share because we're growing at a rate slower than the segment itself. Segment's growing at 6%, which is driven by brand B, who are growing at 49%, and they have 28%. They've gained 8 share points at a segment level, and that's an impressive performance. So you're getting the picture of where the category is sitting and how big each of the players are and what they're doing, who's declining, and who's growing. The next cluster we look at is ranging share of SKUs and distribution, and the first metric is number of SKUs sold. Coincidentally, these are also 100. It's just a coincidence. Normally, you could have 150, 200, or as many SKUs. So SKUs stands for stock keeping units, just to be clear. And that's a very common sort of terminology in the FMCG space. So we've got 16 SKUs which have sold in the last year. We also, the first thing I look at is the variance. What has happened in the last year? So we've gained 3 SKUs. That's good. Others have declined. Some categories have lost some SKUs. Some segments have gained some SKUs. For example, liquids is gaining, and that growth is coming through. Share of SKUs, simply all the numbers below this 100 divided by 100. So it is going to be exactly the same percentage number. But that's just coincidence. This category could be 133 SKUs or 320 SKUs. or could be any other number. But share of SKUs basically saying, so it gives you an idea of we've got 16% share of SKUs, we've got 16.6% share of category. We're roughly fine, but we're growing at 25%, so we could possibly go for more. And then you look at share of SKU percentage plus minus versus a year ago. So again, you're seeing who's increasing their share of SKU. So it gives you a good idea of, you can see the two key players who are growing are also increasing their share of SKUs by 4 and 3%. So they've taken up 7% more of the SKUs available at the cost of manufacturer Y and a lot of other smaller players. And you can look at that at a category and a segment level and also see that liquids is actually gaining share of SKU. They were 19 earlier and now they've gone to 26, 7 percentage points up. The next key metric is distribution. Now, distribution is simply calculated as let me just tick these ones. So we've done these. So distribution is simply calculated as the number of stores in which your product sold or the category's product sold divided by the total universe of stores. It's a very basic metric, and you can see that the category itself is at 96%. So there are 4% stores which do not stock any laundry wash. Could be an opportunity. But how's our business going? We're growing at, we've got 89% distribution. And along with distribution, I also like to look at distribution change plus minus year ago, which basically tells you who's gaining distribution or losing distribution. Now you can look at this at an SKU level. You can drill down and look at it at a segment level or a promotional group level or an SKU level. And you should do that definitely at an SKU level. But what you're going to get is a good understanding of who's gaining, who's not. And so brand D, for example, has jumped 20% distribution, which is quite interesting, though they're declining at 18%. So that's a strange metric. Then you need to go and investigate further to see what's happening at an SKU level. Has something gone on there which we're not figuring out, or something, or you need to query the metrics. Sometimes you need to query metrics. If they don't appear right, query them back to your data provider or agency. So that covers ranging, share of SKUs, and distribution, and you can see some of the impact these things can have on various performance or the state of performance in a category. The next thing we look at now is pricing. Now pricing is, before I get to pricing, I wanted to address one other issue, which was around the value sales. There are a lot of people who have the view that we should look at unit sales or tonnage or liters or kgs, or yes, you should look at that dependent on the saliency of your category and how relevant it is. But ultimately you bank dollars only. So value is what rules. You need to see, you can sell a lot of product and make no money, and you definitely don't want to be doing that. So that the first port of call is value sales. And then obviously you should look at units and see whether that's moving up, or is that there good organic growth coming in, more consumers coming into your portfolio, etc. But let's get to pricing. So pricing, we start with the first metric, which is simply a price per unit. And price per unit is simply value sales divided by total units, and that's all it is. And that gives you your average price per unit for the full year for this category is at $2.75. Now people like to look at price per kg, and we will look at that too. But I'm just a fan of price per unit because it gives me an idea of consumer interaction. Consumers buy units, so it's important to look at price per unit and also look at the variance of price per unit. So we can see that our organization has dropped price per unit by 6%. So they've dropped 6% in terms of price per unit. Other manufacturers have also dropped that. So you can see, and you can see manufacturer X and Y have raised their prices per unit. So manufacturer X, for example, is in a very good position, has raised average price per unit, has grown at 4% and is gaining share, and they are the biggest. So they're doing everything pretty much very well. But again, price per unit without drilling down into SKUs, and which you should do at a segment and a sub-segment level, can sometimes be misleading. So for example, if my average price per unit was $3.50 and I launch a lot of products at $2.50, my average price per unit will come down. And likewise, if you launch higher priced products, then your price per unit will go up. So you need to dive a bit more into the segment or the sub-segment level to see what exactly is happening. The next metric I look at is everyday shelf price per unit. So price per unit is an average. It's the fusion of promotional pricing as well as shelf pricing, which is managed by the retailer. So you want to keep an eye on the everyday shelf price per unit. So everyday shelf price per unit basically tells you what's the consumer buying, paying for the product at when there's no promotion on. And these prices are aggregated at a total sort of country level or nation level. But if you look at them at a retailer specific level, they are more relevant price points like $3 or $2.99, etc. You will find those come through, especially at the segment level. But it's a good one to have a look at. So for example, we can see that the shelf price average has come down by 2 percentage points, driven by us. So we've brought our shelf pricing down by 14%, for example. And we've done that in standard powders. We haven't done that in premium powders, so we've done that in even liquids. So that basically gives you an idea of where price per unit has moved. So we've bought a lot of, so that growth is coming through by declining average price per unit by 6%. And that has come through by declining everyday shelf price by 14% and promotional price by a certain amount also probably. So price per kg and litre. Now this is a value, so and its variance versus the year ago. So why is year ago? That is an important metric to the point that what you can see here is you get a value perspective. So who's the value leader? So you can see that my manufacturer is sitting at $5.33 per kilo, and it's down by 7 percentage points. The others have raised their pricing, and manufacturer X is actually the cheapest, even after raising by 2% at $5.22 per kilo on an average. This is an average. And you can see that in total standard powder, you'll see brand B is at $4.67, which is very cheap. We are also reasonably competitive at $5.12, but there are other brands. There's one brand which is cheaper than us, but there are other more expensive brands which are at a much higher price point. So it gives you the idea that are you the value leaders, or are you close to the value leaders, or are you at the premium end of the market? So for example, in premium powder, you can see my brand is sitting at $12.94 a kilogram. And that is at the absolute premium end of the market. And then we can also see that in terms of liquids, we are the value leaders there. We're just at $5. So we're a cheaper liquid, and we brought our pricing down a fair bit to be even cheaper than we were earlier. So there may be opportunities to raise that at some point in the future. So pricing then gives you the perspective of what exactly, who's moving money where at a total level. The next thing we look at is promotional activity. Now, promotional activity starts with number of weeks on promotion, and this is a key metric which is captured to understand how many weeks you are going to have any sort of price promotion, and then its variance versus the previous year. So you can see that we've stopped promoting much. We were 19 weeks and now we are 14, so that's 5 weeks less. Remember, there are 52 weeks in a year. So I've captured this information for a retailer rather than a total nation level. Otherwise, it'll have big number of weeks. It'll have 40-50 weeks of promotions because you'll be promoting somewhere or the other depending on the category and the number of retailers you're selling into. In terms of the total weeks, remember there are only 52 weeks. And in an ideal scenario, you should not be promoting more than 26 weeks. And that should be the optimum level. So 26 weeks is where manufacturer X is promoting. And others have various levels of promotion, and they're coming down or up as can be. Number of weeks on display. So this is not display on shelf. This is off-location display, and trying to see where the display levels are sitting. So we've had 2 weeks on an average of display, and we brought that down by 2 weeks. And likewise, you'll see other brands. So for example, premium powder has had no off-location display. No one's investing in that. Remember, all of these things cost money. Number of weeks on retailer advertising or coupons. So these are mailers and catalogs and coupons. So how many weeks were you featured in there? Did you negotiate that, or did you pay for it? Is a separate issue, but it gives you an idea of how promotionally active a brand is. So you can see, we've been reasonably active on the coupon side, though less on the display side. Manufacturer X has been doing a lot more display than us. The last 4 metrics are basically not captured out of scan sales. I mean, when a barcode is scanned on a till or a checkout, it creates a data point. All the other metrics I've shared till now can be captured through that. But these four metrics here covered in this red frame, they are captured through a little panel. So you need to set up a panel or have your data provider set one up for you so you can capture all this information to make sense of promotional activity in the category. Then, of course, we look at promotional price per unit. Again, this becomes more relevant when you look at it from a retailer's point of view, as well as from a sub-segment and an SKU level or a promotional group level, which is the right way to look at. So if you look at it from a promotional group point of view, you'll find that it's more relevant and it makes more sense. But you can see how pricing is moving. We've been bringing that down quite a bit at -6 percentage points. And then the final thing, and a very critical fact which is looked at is percentage unit sales on promotion. So everything you've done here on these other promotional price, your weeks on promotion, etc., as well as your shelf price, which you alter that, it changes the promotional sort of performance. All of those will result in a certain unit sales on promotion. And if you watch that video we've done on the product P&L, you will see how important this metric becomes and how it affects your P&L. If you need to promote more, it impacts your P&L. So this category is at 61%, and you can see, and that's the variance versus plus minus year ago. So 6 percentage points. It used to be 67 and it's now come down to 61. Which is a positive sign, and that's pretty much driven by us as a manufacturer, bringing it down by 27 points. So we were promoting quite a bit. We've obviously shifted some money into an EDLP strategy, and we brought our shelf price down, as you saw in the previous chart, and that's working for this manufacturer. But manufacturer X is sitting at 71% of units are sold on promotion. That's a huge amount of units. Again, have a look at that and understand that from a P&L point of view by looking at that earlier video. So next we're going to look at media activity. Now, all the metrics here, for example, media spend, etc., all these metrics you should easily get from your agency. And if you're investing a fair amount of money with them, or even a marginal amount with them, this data should be provided to you for all the categories you operate. And if you don't, then you definitely need another agency or you need to negotiate that separately. So looking at the spend, so spend is basically the dollar spent on above the line media, which is visible. So you pick up through tracking services all the information. So you can see the category spend $25 million. We spend $8 million. We are the big spenders of a small share. So we obviously want to, and we are growing at 25%. So we're justifying that spend to some extent, even though we are being seen as dropping our pricing quite a bit. We've dropped 6% actually on price per unit when you go back to the earlier slides. You can see share of spend is sitting at 32%. So we are clearly the leaders. So that's one of the things I look at. So that's all calculated 8 divided by 25 and so on down to arrive at a share of spend. So who's spending the most, who's spending less? And where they are spending. Are they spending it on standard powders, or are they spending it liquids is getting 40% of the spend, even though it is just under 20% of the category. So you can see where the focus of the category is, and we are also spending a big chunk of our money on liquids. In fact, we're leading the spend there, and we possibly need to look at that, because we're obviously growing at 4%, but there's someone else growing at 49%. So it could be a product issue or a range issue, etc. In terms of does the product configuration right, etc. But I'll not get into that now. The next one we obviously look at is dollar million and share of spend percentage plus minus versus a year ago. So the dollar million is only for the category spend. So I just want to capture whether the category spent less or more than last year. The rest is share of spend variance plus minus versus last year. So the previous year we were sitting at 28% share of spend, and now we are at 32 because we've added 4 percentage points. Manufacturer X is also investing more. Manufacturer Y is actually reducing its spend, possibly watching as its sales are declining and it's getting impacted due to other reasons. Maybe its product portfolio is not right, etc. But you get an idea of who's spending where and who's reducing their spend, who's a smaller component now of the total spend. The next one I look at, and this has become more relevant in the last 5 to 10 years, as before that pretty much most of the FMCG world would have the largest vehicle of media spend was without a doubt television. Now a lot of organizations and brands are focused on digital, and at a future date I see that even further being segmented, social, mobile, and although people are doing it even now, there are brands which are 100% on digital. So I like to look at which is the biggest vehicle of media spend. Are you spending big on TV, or are you spending big on digital? And what is that as a percentage of your total spend? So digital is the biggest spend in the laundry wash categories, looking at 45%. We're spending 62% of our money is on digital, which is a huge amount of dollars, of 8 million going into digital spend. Manufacturer X is spending 40%. So you just get an idea of who's spending where and how much, and what is their focus in terms of investment. And that helps you frame an idea of how the competitor behavior may eventuate further. So the next thing I just want to talk about was, we've looked at all the metrics, we've seen all that it can do, and this is the first slide. I brought up all the state and the impact of all of these, and we've now had a quick look at all the metrics which cover those 33, which are those 33 metrics. I think once you've got your head around these 33 metrics and have a good understanding of the category, you should be able to write a medium-term brand, category, and trade strategy if you've understood the segment and category well. Obviously, you've got to see your internal sort of mission and vision and how that's working with the state of the category, and then you should be able to write that. And the other more critical thing is, you should be able to understand how the actions of the market and its players, so the market and its players, and by which I mean competitors as well as retailers, you should understand how they can affect your sales share and ultimately your P&L. Because we are in the business of making money, so obviously you want to see how that can impact your P&L. So that covers how to analyze a category in the short to medium term. I hope you enjoyed that. Thanks for watching.